everybody, it's Jane Johnston with Briar Hill Group at RE/MAX Camosun, host of Vancouver Island Time. I'm here with...
Hey everybody, it's Andrew Plank with Royal LePage, host of He Said, She Said, They Said with Jane Johnston.
Yeah, we're going to be talking about real estate in Victoria. Specifically today, we're going to be talking about kind of alternative types of homes, leaseholds, co-ops, and then we'll also talk about A and B lenders and what's the difference and how does that affect you as a buyer. But first,
good topic to have this time because people are really having struggling with the sort of standard affordability for standard type of housing. So they're looking at other options. It's good to understand what those options are and that maybe they're pros and cons.
Okay, but let's just do the market update and then we'll go into that. So 213 new listings in the past week, 181 pending. So list to sale ratio is still pretty good. Price decreases at 33.
Mm-hmm.
Solds at 177. So that's from last month. Go ahead.
Yeah. Well, I've been watching the hot sheets. You know, I watch what's been listing every day and then looking at what's been selling and trying to, go through the list in general of all the sales and see how they're in general doing list versus sales price. And I'm finding that they've actually become a lot more even than they used to be. There's a lot less way over asking price offers than what I was seeing before. A lot more just right at asking price, maybe a little above, maybe a little below. And that does not mean that prices have come down. It just means that prices have actually come up, I think, to a level where people are now all kind of agreeing on price, if you follow me.
I do. And also I think though that maybe perhaps we've been in the past maybe listing a bit high and we're coming back down to a place where buyers are comfortable. I remember that triangle I had with the outlier and the outlier determining what the sale price being and not everybody seeing all the other 19 offers at a lower level.
Right.
So I personally think also I've in the past 2 weeks
we're seeing less outliers though, Jane, is what. Yeah.
Exactly. And also I've seen in the past 2 weeks, I've gotten 3 accepted offers with conditions.
Right. Yes. Yeah. Good for you. And that's really telling because, and you're seeing that too when you're calling for showings or you're looking at properties and it says accepted offer. We're still encouraging showings, accepted offer, conditions due in 2 weeks time. And you just know that, well, they were out to market in a market where in the past it would have received unconditional offers and be sold. Now they're accepting offers that have conditions and they're selling nearer the asking price. So
right.
Yeah.
So do you want to go over what's happened month to date?
Yeah. So far in July, so we're kind of mid-month here. So far getting towards mid-month. So far in July, we've had 253 unconditional sales. That's compared to the full month of July in 2020 at 979. New listings, 325 so far this month, compared to 1,480 last year in July. And then active listings were still way down, 1,391 this month versus 2,653 last year.
So it's a great time to put your house on the market because although the volume is down, so is the listing. So the pressure is gonna put the prices down. The prices down.
Normally I would say to people, you're busiest in the spring and, let's look at strategies and where the market's in general going. With it so low right now, there's no downside to listing through the summer other than maybe having to keep your home clean when you'd like to be at the lake.
Okay, so let's talk about our main topic today.
Before we do, can I share screen? I just want to share something I saw today. Yeah. So let me just share our screen. And this one, actually, this one. No, where'd it go? Right up. Can you see some stats? Actually, can you see stats that say around the province?
We need it bigger. Yeah. Bigger. Yeah, we're good.
Okay. So this was the year-over-year change for the different boards throughout BC. And it's really interesting because in the centers, we've got 25, 30% rises in value. But then you've got some of the northern areas, and in South Peace River, we actually had property values go down year over year by 3.3%. Which that one fact really struck me. I'm wondering if that has to do with fires or like what is it about the South Peace River area that would cause a value drop of 3.3% when everything else has been going up 20 to 30%?
Well, with COVID, maybe it has to do with what the economy is doing.
Economy too. Yeah, good point. Yeah. Anyway, I just thought it'd be interesting for people to see. And Jane, we can just talk percentages and go through these different boards. Like BC Northern was a price change of 13.8%, Chilliwack 24.5%. You want to take it away, Jane?
Sure. Fraser Valley 25.7, up from last year. Greater Vancouver is of interest to me, only 14.3%.
Yeah. It was already pretty high, so maybe you just didn't. It sort of the threshold is just a little harder for there to be that much gain. Whereas like Kamloops at 28.8, their average price is half that of Vancouver.
Are these home price index pricings, or like what is it?
I believe this is just general average pricing. It must be average pricing because the average price of a house in Greater Vancouver is probably higher than 1.2.
Yeah, and I noticed in Victoria it's just showing around 897, which to me seems a bit low.
Yeah.
Interesting.
Yeah, so I just wanted to share that really quick. I thought that was kind of an interesting one, and there may be opportunities or challenges to be had in those different areas to consider.
Well, I know that there are companies that go to other cities and look for what's called the falling knife. So they try and determine if they can get in before the market hits or is hitting the bottom so that they can redevelop and then get it on the way back up.
Nice. Interesting.
Okay, let's introduce our guest here, Anthony McLachlan. Hello.
Hi there. Thanks for having me on.
How you doing?
I'm doing pretty good today. Yeah. Keep it cool. It's another hot one.
So, Anthony, tell us what company you're with. What do you do? What company are you with?
So I'm with Mortgage Architects, Rate Desk, and I moved to the island a little over a year ago now, from Toronto originally, and I wanted to get out closer to the mountains. I had a lot of exposure to BC over the last several years, and it just became harder and harder to leave. So here I am.
So you're a mortgage broker?
Yes, mortgage broker.
Okay, can you explain what a mortgage broker does, please? Because there are people who sometimes they talk about going to lenders, other people talk about going to mortgage brokers. And so a lender would have a mortgage specialist. What's the difference between a mortgage specialist and a mortgage broker?
Well, so in broad strokes, a mortgage specialist like you'd meet at your bank, they only deal in the products that the bank has, right? They're specialists on those items, and that's pretty much right where they fall. Those are the lines that they kind of have to stay within. From a mortgage broker, we have access to a variety of different lenders. I believe Mortgage Architects, we have access to about 40 different lenders, and those are just the ones that we have open dialogue with on a weekly basis. But there are other ones that there are always new monolines and different lenders kind of popping up here and there offering new products. So we can also get more lenders that way. And really the advantage to working with a mortgage broker comes down to saving you time. Purchasing a home can be a very stressful process. And if you're going to start hopping from bank to bank, reading these documents that they're giving you without any knowledge of what you should be looking for, what's important, and where you can save the most money in probably the largest investment you'll make in your life, why not have a mortgage broker work for you? Your interests, or client's interests, are always the most important part for us. We represent the client, not the lender that we send the business to. And clients always love the fact that working with a mortgage broker is free in most cases. We're paid through a finder's fee from the lender. So yeah, put a mortgage broker in your corner to relieve some of the stress and walk you through the process to help explain you what the standard terms and conditions mean in the mortgage commitment, and help relieve some of the stress there and make sure that you get the best product possible for your situation.
And I think that's so true, to have people walk you through the terms and conditions, because often people just look at the rate, which is one-dimensional. We're getting feedback from somehow. Can you guys turn down your volume a little?
Yeah, I've done my volume down. We're not hearing anything I'm not hearing anything feedback-wise in the feed.
Okay, that's better.
A bit better. Might have been on my end.
Okay.
So
anyway, if someone was looking to hire a realtor and they wanted to hire a realtor and that realtor only worked banking hours, they probably wouldn't get very far, right?
Exactly, and very similar for us.
Exactly. Yeah, I find that when I am working with someone who's working with one of the larger institutions that's a bank lender, that they work on more limited hours of availability, they're less responsive, and they need more time for response in terms of an actual approval, because there's not that same kind of level of care, attention, and detail. It's more like you're a functionary in the bank doing a job, as opposed to someone, there's someone, and so you're working those hours and there's no motivation to be really quick and responsive. Whereas someone who is a mortgage broker and has availability of a lot of different tools and products, but also, understands this business and understands that, their bread only gets buttered if they actually help someone to success, then there's more motivation to be responsive.
100%. I mean, when my clients succeed, I succeed, right? I mean, being as we all are commission-based in our commission-based careers, it's crucial for us to be flexible and to be available to our clients, and especially over the last year, where communication from the branch level from banks, it's been tough for people who go that route for their financing, because good luck getting your bank on the phone when they're dealing with all the COVID-related issues of people deferring their payments and customer service. Not to go for the knees of the competition, but customer service has been a struggle for banks over the last year, right? So that's always important for all of us.
Yeah.
Awesome. Well, I personally always try and recommend a mortgage broker over a bank, not because I don't believe that, I have an instance right now actually where somebody is using the bank and it's working out well, but I think it depends on the person employed by the bank, how accessible they are.
It used to be that if you had a relationship with your bank, and I'm talking, that story you hear about people in the, 40s and 50s. It's like, I know my banker and my banker's got my back and they know my situation and they will lend me money, even though, on paper, my situation's not that good. But nowadays banks are all about the paper, and it's not really any of that relationship anymore. So it doesn't really I don't see the benefit anymore of working with the bank. And I'd love, to me, if there's anybody in the banking system listening and saying, actually we have products and we can make this work and there's reasons why we could do this, I'd love to hear it, because in my experience over and over and over again with clients, when someone's working with a bank, or not just my clients, but when I'm dealing with a listing and the buyers are working with a bank, it just tends to be, that's where we tend to see the problems. And not to say there aren't great bankers out there and there aren't poor mortgage brokers out there, but on the whole, works better. Okay.
So the reason why we're here today, though, is besides the merits of a mortgage broker.
We can keep talking about that. I love this conversation.
Yeah.
We're talking. The reason why this question came up is because I've had a lot of people talk to me recently, they go on realtor.ca and they call me up and they go, hey, what about this property? And I'm like, I'm showing you everything on realtor.ca through my Matrix portal. And what you're looking at is not in your search because it's a leasehold or it's a co-op. So let's talk about leases. So I actually have a quote from a website. With a freehold, you basically own the property and the right to remain in the property in perpetuity, provided you make timely payments to your lender. But in a leasehold situation, you are buying the structure and the buildings while leasing the land from the owner, possibly the government or First Nations. Leases can last up to 99 years, but once the lease runs out, the owner may choose not to renew it or may renew it at a much higher market value. So you face an uncertain future, and also you do not have an interest that runs with the land. So, Anthony, how do banks look at leases? I'm going to take this.
Very detail oriented. Obviously, the entire mortgage process is very focused, and there's a lot of things to consider. But yeah, with leaseholds, not to say they're more complicated, but they do have their own set of issues that we need to look at, right? I mean, when it comes to that lease, usually it's several, I mean, 90, 100-year long lease, right? But when the building starts aging and gets older and that lease term starts creeping down, there are other factors to consider, such as the amortization of your mortgage. Lenders aren't going, if there's, let's say, only 25 years left on the lease, lenders aren't going to give you a 25-year amortization. That amortization is going to be 5, maybe 10 years less of that, meaning you're looking for affordability, but if the building's old, you have to pay off your entire loan in a shorter amount of time. There goes your payments. So a lot of other things to consider. You have to look at the different lease structures, the relationship between the landowner and the developer to make sure that you're protected. In these instances, I would strongly recommend that a client has a lawyer look at these documents thoroughly, because as a mortgage broker, we're not. It could get litigious if I start offering unsolicited legal advice on what the head lease or the sublease looks like. So yeah, you definitely invest in a lawyer when looking at leaseholds to make sure that you are protected.
Also, the person who owns the building can uniformly make a decision. So, for instance, at the Orchard House, which is on Michigan, they uniformly decided they were going to replace the windows. And so the owners just had to pay a bill.
Yeah. And that's the difference when you've got a strata kind of ownership where you know, it's the people living there or the people who own it make the decisions around the upkeep. And so if there is windows that are older, as a group, you decide, are we going to update these or not? You vote. You follow the majority rules. When you're in a leasehold, the head lease owner is making those decisions around repair and maintenance, and then assessing to the lease the people who are leasing. They're assessing those fees to them almost arbitrarily. I mean, so you could buy a place and you don't actually get to see. Whereas again, with strata, you can sort of see the history and the strata minutes and what they've been looking at, what they've been considering, and what you don't get that. You just sort of, he pays you money, it takes you chances.
So the other thing I wanted to talk about, well, first of all, so I don't even sell them because I just find financing, you just can't get financing because a bank's not going to invest in something that you don't actually own. You're just buying a lease.
Let's talk a little bit about why you would buy them, though. And why you might buy them is you have limited income, but you have cash. You're elderly. You don't have anybody. You're not concerned about your estate, and you need a place to live. You might want to buy a leasehold because you can actually, leaseholds tend to sell for less than an equivalent strata. They tend to be, your money will go further in that sense in terms of getting yourself shelter.
Yeah.
Sorry,
so another good opportunity with this is that you can get in a desirable area, because whereas if you wanted to buy in that area, it's maybe more expensive. But if there's a leasehold opportunity, you can certainly get into that neighborhood that you might want to be in.
Correct. Yeah.
Yeah, and typically here they're found in James Bay and Oak Bay.
Mm-hmm. Yeah, and there's some on First Nations land as well. And then there's a newer leasehold up on the peninsula, brand new one.
Yeah, and so it's going to be worth more the newer it is, but if you look at it over time, the less amount of time there is available in the lease, it's going to be worth less. So you're buying a depreciating asset.
Worth less, and you have to pay more per month if you're financing it. As Anthony alluded to, it's less time. If there's 99 years left on the lease, the risk is lower. It's still not a great form of ownership compared to other options, if all things being equal, but that's why they sell for less.
The other thing is, if you're just looking for cash flow, often because they're located in great areas and they are rentable, you can rent them out. Like you could pay $80,000, for a condo and rent it out for, I don't know, $1,600 a month. So you're going to make money on that. So people looking for cash flow often buy them. And I know in Orchard House, there are people who buy and they're buying for the view. So they trade up the building to get to the to the harbor side.
Yeah.
Climb the ladder.
Yeah, steel and concrete building, wonderful views, desirable location, less money than other comparable shelter, but again, there's a limited time on the lease. They're harder to finance, harder to resell, and you just don't know if you have to budget for these unknown special assessments that could come up on you.
And the other thing that we haven't mentioned is the fact that they're all subject to approval by the leasee, the person who owns the property. And often there's a manager who you have to go and talk to. And so I'm primarily thinking of condos right now, but also on First Nations land. They can be, the head lease can actually be with the band, but they're often it's somebody within the band who is going to be the manager that you need to interview with.
Right.
So, and also I find that the pad fees, you don't have a say in the pad fees. So if they could be like $500 a month when you come in, but you may have a month-to-month lease on First Nations land. If you're buying in a building, your lease is like 20 or 30 years more. First Nations land, they can range right now from month to month on Craigflower to 35 years up in Central Saanich. And so there's peace of mind knowing that you're going to be staying there.
Yeah. When you compare a mobile home, which is generally month to month or maybe annual, versus a longer term lease in a townhouse building or a condo building, again, in the scale of desirability, you're better off going to one of those longer term leases, than the month to month, for sure. That's always something to consider.
Anthony?
And the head lease too. So we talked about the head lease. The head lease is, owned by the company that owns the land or the land in the building. It can be one or the other. So you could be, you can actually own a unit, you can strata, this gets really complicated, but you can own a strata unit in a building that's on leased land. And that gets even more complex. And I'm not aware of any here in Victoria, but just to get really geeky about it, it can get really mixed.
I just wanted to chime in that, lending is more challenging in its ways. Big banks, Scotia in particular, will do leaseholds. But again, when things start getting a little bit more complicated, then you kind of get pushed out to the credit unions. And things don't look too great for the property, then maybe you're looking at private. But the big banks will touch it. I actually have a client who's looking at leaseholds right now. So just in the approval process of that, and hopefully I'll have a success story from that one. Because they're not, I mean, it's not too often you pick a client who wants to look at leaseholds.
Right.
Okay, so let's talk about cooperative. So they're slightly different. So a co-op is where it's actually a corporation that owns a property. So let's say, I know I had a listing in one, they had 12 units. So let's just say 10 units. So everybody owned 10% of the corporation, and it was, normally it's based on square footage. So if it was 100 square feet, if you had 10 square feet, you would own 10%. If you own 20 square feet, you would own 20%. So those have rules and bylaws as well. They also require you to be interviewed by the co-op committee, and it's governed by its members. And often you are given duties within the co-op. And if you have a dispute, you have to go to the co-op to resolve it. And then when you go to sell, you're selling a percentage of the corporation. You're not actually selling your unit. So often banks are like, there's no land here. It's just a percentage. So they're hard to finance as well. Have you financed any, Anthony?
No, I personally haven't. I was introduced to the co-ops. I didn't know about them before getting into the mortgage industry. But they are definitely, in my research, they are definitely the most challenging out of your freehold, leasehold, and co-ops. And that also comes down to the legal nature of it, because it's incredibly difficult for a bank to foreclose if you default on your share loan. Because again, you're purchasing a share. There's the liquid equity just isn't there, right? So it makes it very they're just very limited to no appetite from a bank. So again, you're looking at a credit union in the area, and most likely private.
Yeah, and again, a good option for folks, and I've had clients like this who are cash buyers and are not going to meet a good lending profile, but are cash buyers. And the history of co-ops, you might say, like, well, why are there co-ops if there's other better ways of going about this? And generally speaking, the co-ops came around. There's many older co-ops that kind of predate the Strata Property Act, predate the idea of making a strata plan and applying condominium style living, where there's more structure, to more defined structure with the Strata Property Act. But with a co-op, yes, you're buying a share in a company. That company owns some land. Through the shareholders agreement, you get the use and enjoyment of a portion of that land as outlined in the shareholders agreement. And if you want to sell that share again in the future, you might be subject to some rules of that group as well. So it's more amorphous. The rules are more fluid. There's more variability in how you can own these things. You could own a share on recreational property. You can own a share on a piece of land that has a building on it. There's lots of different ways that people do this, and there's still, again, for recreational properties, I'd say it's more common these days and more of a reason for doing it. Get some friends together and buy it through a corporation. Problem with also buying a share in a corporation is you're buying all of the liabilities of that corporation as well. So you don't necessarily, you definitely need to do some research into what you're buying when you buy a share in a business.
Anthony, did you want to comment on that?
Well, I just, in terms of benefits of it, a lot of people look at co-ops because of it does have a very strong community focus. So you see retirees often, they don't want to move into a condo where there's turnover every couple of years from your neighbors. It's I was going to say the word commune, but maybe that's more dated. But it does have a stronger community focus, and your neighbors are almost, from what I've been told about it, your neighbors are your friends, and everyone knows each other, and it's more of a community atmosphere.
There you go.
I agree. And they often can be fun. Like they'll have work days and stuff where people get together and The thing is that because it's hard to get the financing because the resale is narrow, that affects the price, which keeps it lower.
Yes.
So
Yeah.
all of these people are attracted to them because of the low price, but they don't realize how hard they are to finance because the bank won't go for them, or you'll have to go to what you were saying, a credit union as opposed to a bank.
Mm-hmm. Right.
Okay, so let's just talk about A and B lenders. What's the difference between an A and a B? Is there a C lender?
No, I guess that would be private. If we're gonna run on the
That's the kind of lender that has the club that kneecaps your.
Yeah. The C lenders. I don't think you want to be borrowing money from a C lender. They come after you with a baseball bat. Yeah. So A lenders, that's your traditional Schedule A banks, and those credit unions that we were talking about. They are the cookie cutter type deals. You've got good credit. You've got a stable income. The lending that most people will pursue first. B lenders, typically when you're talking about interest rate, you're looking at about a 1 to 2% difference, higher, obviously. And they are far more lenient on things like your credit score. You still obviously have to qualify for the debt that you're applying for, but they get a lot more lenient. Obviously, you're going to sacrifice rate, but I mean, if you're really pressed and diehard to get into the market, it is a good alternative. I like to, with clients who are short of qualifying for A products, I would recommend it only as a Band-Aid, because you don't want to be. Just because the amount of interest you're going to pay, if you're paying an extra 2% over the life of your mortgage, that really is going to add up. And it's always good to encourage your clients to focus on building their wealth through real estate. But that becomes challenging when you're paying so much towards your interest. Obviously, 2% more of 1.5% variable is still a lot lower than what my parents were paying in interest. So it's all relative. But and then obviously you have your private lenders who are that's the last resort. They are unregulated, so the terms and conditions aren't exactly not always legal. So that is where you definitely want to seek legal counsel in order to make sure that that you're not being taken advantage of, because there are some underwritings out there that can be very not in your favor, and you don't want to pay the price. So again, that's when we were talking about at the beginning of the show of the advantages of working with a mortgage broker, is put those documents in someone's hand who's familiar with them, to say, okay, yeah, this is reasonable. This is what you can expect from private lending. This is okay to go with. But there'll be things in there that you definitely want to avoid.
There can be times where you come across a real estate opportunity where it truly is an opportunity, and paying some extra interest is perhaps worth doing if that's your only option. And when we look at what the rises in values in the last year have been, then someone who chose to go with a B lender versus because they didn't qualify for A and pay a couple extra percentage points would have done quite well for themselves. But you can't always predict that type of future. But you lenders, from their perspective, when they're thinking about giving their money out to different people, they're going to be looking at, what is the risk of me getting my money back? And they're going to charge a percentage based on the risk and for their profit. And so it's not surprising that if you don't fit that cookie cutter profile, if you don't fit within all of the boxes that the standard lender is looking for, you may have to go a little further afield. But one of the things I like to recommend to anyone who's looking to buy a home in the next little while is go talk to a lender and find out what you have to do, or what is required to fit within that cookie cutter form. What is it? How can you? Because if you go to them, with your hat, in hand and looking for a loan, and if you've gone 6 months ago before you had that opportunity and started to align your situation to, I've got to correct some of my credit rating. I've got to, put this into place. These are things that you can do to help move the scale a little bit so you can move from B to A.
Right. And I think it's always a good time to have a great relationship with your mortgage broker starting now, because if you're going to finance in a year or 2 years or 5 years, you're going to have your ducks in a row. So you start working on your deposit, getting your notices of assessment, maybe changing the way that you run your company so that you're including more personal income as opposed to corporate income. Things like that are ways that you can influence how you're going to be seen by the bank. So
and that's one thing I remember from when I ran my own business before I was in real estate, was going to the lenders and them saying, you're not making enough money on, and well, I've got a lot of write-offs, I'm self-employed, and at the time there wasn't the same kind of programs for self-employeds. But the more you can make, you may have to pay more taxes, but the more you can make, if your intention is to buy a home and you might actually benefit more by buying a home, then you might want to not have so many write-offs. Anyway, it gets complicated. Talk to accountant and lender and all of that stuff. Talk to your realtor. Talk about your plans well in advance.
What were you going to say, Anthony?
Oh, I was just saying, Jane, I think it was you and I who had a conversation about folks making those micro decisions throughout their lives and how those really do add up. Just your spending habits, and when we're talking about how you're setting up your corporate structure of how much you pay yourself if you're incorporated. It's those little micro decisions that really add up and can go against your favor in the long run when it comes time to qualify for a home. So speaking with a mortgage broker or financial advisor a couple of years in advance, it would be absolutely crucial for some people, because then they wouldn't hit roadblocks when they're trying to qualify for the type of home that they want, especially with home prices rising and it being a lot more so competitive out there, right?
Especially I'm thinking like people who are in the service industry who are hairdressers or like I had a client who was a hairdresser or a waitress or whatever, a waiter. They don't declare their tips a lot, and so it doesn't show up on their income. Meanwhile, they're pocketing that, so they think, well, I'm not paying taxes on it, but because it's not showing up, the banks don't count it.
And then they don't qualify for the home, and then they don't get that property appreciation, and they continue to be renters for many years, and it costs them more than it would have saved them.
And it's great if you're going to eventually throw those tips into your bank and keep them all there for your down payment. But if your income doesn't come in as high as you want it to, there's really not much you can do in terms of qualification to try and stretch those numbers.
Yeah, and often like purchasing a house. So I was thinking that the B lender or the private lender is somebody who's making a bet that you may fail, and they get the property at a discount. Mm-hmm. I have a friend who was making 12%.
Yeah,
12%. Like, who wouldn't want 12%? So she and her husband were B or alternate lenders, and anyway, I was just like, it's brilliant. It's a brilliant plan, but it takes advantage. I personally would have a problem with that, but anyway. Any questions for Anthony, Andrew?
No, glad you made it to the island. It sounds like you're like many people who are saying let's go west, and you're one of the few who have succeeded. And good for you, and welcome.
Thank you. I'm very happy to be here. It's definitely a good life choice.
Yeah.
So Anthony, how do people get in touch with you?
So people can reach me at Anthony at ratedesk.ca. That's RATE desk.ca. Should I give out my phone number? Yeah, or you could reach me at my cell phone number is 250-686-0383. So those are the best two methods to get a hold of me. Yeah. And you can find a little bit more about me and my team at ratedesk.ca.
Okay. And Andrew?
Yeah, you can reach me at info@andrewplank.com. That's info as in information at andrewplank.com. Or call me or text me 250-360-6106.
Or go to andrewplank.com.
Sure.
And my name is Jane Johnston. I keep forgetting to edit that space. My number is 250-744-0775. You can reach me at briarhillgroup@gmail.com or go to one of my two websites, briarhillgroup.com or vancouverislandtime.com. Anthony, thank you so much for coming today. I really appreciate it.
Thanks for having me. It's a good chat.
Yeah, you're a very bright guy, and anybody would be lucky to work with you.
Oh, thanks so much.
Okay, so we'll see you next week. Don't forget, everybody, to subscribe to He Said, She Said, They Said. We're on every Monday morning at 10 a.m. We'll have Anthony again to discuss more in-depth information about how to get yourself prepared for your loan when you're ready to purchase a house and when you should be chatting with him, which should be now. And next week, Andrew, is there anything you want to focus on?
Nope.
I got an idea.
I'm never prepared for this. You should know this question is coming. I just like to be here and chat about real estate. I don't really care what the topic is.
Why don't we talk about
this topic this year though? This today.
Pardon?
Yeah. This was a great topic today.
Good.
Yeah.
How about we talk about home inspections next week?
Okay. In what way?
We'll talk about what to look for in your home inspector and what you should be flagging in your home inspection reports and how your realtor can help you negotiate with that.
And maybe what is a home inspection? What does it cover? And maybe can you do it yourself? Should you? All of these all this and more next week.
All right, we'll see you next Monday at 10 a.m. Take care, everybody.
Thanks, everybody. See you, Anthony.
Thank you.